A lot to get across from over the weekend: geopolitics, competing with the U.S. jobs data. Let's talk about what we're expecting for this week's trade, and today as well. Peter McGuire, he is the CEO of trading.com. Peter, good morning to you. Hope you had a good weekend. Let's get right to it, though. No time to waste. Jobs data. What did it confirm? What did it solidify for us as investors and traders?
Well, happy Monday, Nadine. Good to see you. I tell you what, I thought it was relatively good considering you had unemployment rate fell to 4.4 from 4.6. It added 50,000 jobs. In November, they had a revise from 64,000 down to 56,000. So overall, it was positive. That's, I think, and Wall Street demonstrated that. That was a nice uplift as far as the Nasdaq up nearly 8.8%. So overall, a positive tone, and we blast off into 26 on some relatively good numbers and possibly a 5.4% GDP number forecast for Q4. That's of 2025 by the Atlanta Fed model.
All right. Look, we've got interest rate expectations, 95% market expectation for a hold from the Fed. So let's not talk about that. Let's talk about what also really came to the fore over the weekend in particular were those protests happening in Iran. That has raised the specter of some supply impacts for oil. How do you see it?
Yeah, that'd be right. I mean, there's no doubting it, Nadine, and it's very much a work in progress. The next 45 days are going to be crucial, naturally, for oil supply. And the ramifications running off that as far as supply chains and, of course, the Strait of Hormuz, and that could be very much disrupted. You've got 30-odd% of global supply coming through that bottleneck. So if that was to really escalate, that would certainly drive prices higher from a geopolitical standpoint. And of course, you've got, any form of war premium would be quickly built in. WTI is back at 59. You've got 63 and a third for Brent, and they're edging up from here. So it's very much, the risk game is back on as far as energy. That situation, we only had Venezuela a bit over a week ago. So it's, 26 is off to a flying start for certainly the crude market and how that's going to impact naturally supply and any disruptions that could face the market.
Okay, so that's oil. It's a really interesting sort of setup, though, for oil because you've got supply concerns mostly related to geopolitics, and you can throw Russia and Ukraine into the mix. But then you've got the U.S. president hauling oil execs to the White House, telling them they need to spend as much as $100 billion in Venezuela to significantly increase production there. So, excuse me, Peter, it is the reason we haven't seen, oversupply concerns, I suppose, coming from that is that it'll just take such a long time?
Well, yeah, the Venezuela situation, naturally, Nadine, that's going to take years. And as you mentioned, from a capex expenditure, probably the best part of $100 to $200 billion of funding to get a result. And that's not a quick turnaround. You're talking a number of years, could be by 2030, and you've got, big increases as far as production coming out of Venezuela. So it's not just turn a tap on and there it is. The next part of it, of course, is from a refinery side of things. And then, because it's heavy crude, and then the next part is going to be the disruptions to the likes of China and the associated countries that buy Venezuelan crude. So, yeah, it's very much a game of brinkmanship when you're looking at all the chessboard and how it's moving. So, yes, Chris Wright, the Energy Secretary, he's been very vocal as far as US and naturally the Venezuela situation, and moving forward, the forecasts are up to 15 million plus barrels a day of US, as far as crude production. So they're not sitting on their hands. It's going to be a very interesting year for crude and naturally, where price is.
All right, and gold as well, looking well supportive.
Yeah, 4,500. It's had a nice rally and it's nearly at all-time high. I'm still out there, saying 4750 sort of number by end of month. I know we're getting closer to it, but I think of the overall momentum. Little Brother's good as well, 79 and a third. So it's had a very strong move, but it's incredibly volatile silver. So let's just see where gold takes us. US dollars had a bit of a rally to the upside. It's running that, we had a 99 and a bit. So the overall, I think, picture as far as currency trades is very flat at the moment, though the yen's softening. and we've just got to keep a close eye on where that US dollar index takes us.
Okay. So when you look at the data that's on tap, retail sales in the US, but inflation as well, how do you anticipate markets will react if for some reason we start to see not just sticky inflation, but inflation increasing? I mean, wages in the jobs report were, on the upswing as well.
Absolutely, there's no doubting that. I mean, there's from a salary side, it's been a positive tone for workers. There's more, and just some of the big picture coming out. You've got 136 factories that are under construction, 78 processing plants, and 199 warehouses across the US in 2025. And they're continuing. So you need more workers, naturally higher salaries, and how that's going to play into inflation. So President Trump's saying he wants to be under $2 a gallon, even as low as under $1 a gallon. So this is going to be, again, a fascinating point moving into, by mid-year, and then you've got the midterms. So I think, strap yourself in. 26 is going to be even, I think, more wild than what we saw in 25, and that's a big statement, Nadine.